Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to introduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, how are you?
Good afternoon. It's not too bad.
Is this a day really that we should all, dare I say, have a day off pending the Federal Reserve's decision tomorrow?
Yeah, I mean, there probably aren't too many prices for getting heavily involved today, but ahead of a decision that is pretty binary tomorrow. But of course, there's always things to look at in the market and consider, and we'll cover a few of those in the presentation. But I think for the most part, most people are going to sit on their hands until 7 o'clock tomorrow evening.
That sounds pretty wise to me. Okay, we've got a number of slides to go through. Let's go to the first one. Data released over the European session.
Okay, well, for a change, we'll start here in the UK.
We haven't done that for a while, have we?
We haven't. No, we've been focusing mostly on all points east. But UK unemployment for July published today, it came in at 5.5%. So again, the unemployment rate has dipped slightly, which is great. That beats the forecast of 5.6% and the prior read of 5.6%. So there's a feather in the cap for the interest rate hawks, I would suggest. And then average earnings for July, no change, up 2.9%. Bang in line with the forecast and a smidge ahead of the prior read of plus 2.8. So a good read there as well, and nice to see a bit of wage growth. Whether it's sufficient enough to sway the Bank of England's hand remains to be seen. But if we move into Europe then, and we look at some of the inflation data that came out of there this morning, so Eurozone CPI, this is the core number for August, and we look here on the year-on-year basis, so August 2015 versus what it looked like in August 2014, and prices have risen by 0.9% over that period. That's below the forecast of plus 1% and the prior read of plus 1%. Just to show how confusing, though, the inflation picture is these days, if we look at the plain old straightforward CPI and we look at it for August on a month-on-month basis, there's no change, 0.0% the read. The forecast was 0.0%, slightly better than the disinflationary number we saw in July of minus 0.6%. But inflation is not giving a clear picture in Europe, certainly, and I suppose that's one of the things the ECB will be wringing its hands about.
Understood. Let's move on now to the European movers.
Okay, well, a positive story from a Swiss company. We haven't had one of those for quite a while, but Richemont, ticker CFR in Switzerland, trading around 77 francs and 5 cents, up around 6.94%. They had numbers today. They beat earnings estimates. They saw strong European demand, largely thanks to tourists coming into Europe to take advantage of the weak euro. But they admitted that there was tough trading still in Hong Kong and Southeast Asia. And we wouldn't have been,
no surprise there, I guess.
We expected to hear anything different. Nonetheless, they rallied strongly. Probably a little bit of short covering here, I would imagine, looking at the size of the move. But good news for Swiss shareholders there. And then moving across the border into Germany and to look at a German mid-cap, one that may not be familiar to viewers, but Deutz, ticker DEZ in Germany, €3.60, down a whopping 27.25%. This is a manufacturer of diesel engines for both agricultural and commercial use. They've warned on profits for the second half of 2015. They cite sluggish current business and a lack of new orders. And that's a surprise, really, because you tended to think that German manufacturing companies have been solid and are likely to continue to perform solidly. So could be a one-off, but it might be the precursor.
Something more sinister, dare I say it. Okay, so let's move on to M&A. Let's talk about the rumours and movers.
Okay, well, we've talked about consolidation in the cable TV space ad nauseum, really. We've also hinted that there would also likely be some moves to consolidate within the content space, if you will, and we're seeing the first of those deals potentially coming to fruition this morning. AMC Networks Incorporated in the States, which is ticker ACMX, trading around $74.44, are in talks, early talks it must be said, but talks nonetheless, about buying Stars, that's ticker STRZA, trade around $41.50 there, about 6.7% pre-market. Now, talks are at a very preliminary stage, but the reasons for getting together, are basically all about synergies, and a jointly controlled group would have a much bigger and better buying power and a market cap close to $10 billion.
Right.
Stars is controlled by a man who we can't seem to stay away from.
John Malone.
John Malone,
Yep.
cable TV magnate. He, of course, has advocated consolidation in film and TV studio sector. AMC Networks controls various cable TV channels in the US and across Europe, the Middle East and Africa. Is best known over here probably for series such as Mad Men and Breaking Bad, and it also operates BBC America. Just to complicate matters, John Malone did a swap with a company called Lionsgate, so he sold a stake in Stars for some shares in Lionsgate, so anything he's involved in, that there's always cross deals to be done. This won't necessarily be a straightforward deal, as we saw with his conversation about Vodafone yesterday, but I suspect what it is the first of a number of deals that will consolidate the sector. So watch this space for more news, really.
Understood. Okay, so let's move on to US data points to keep an eye on today.
Okay, well, there's only one really of any consequence today. That's CPI, Consumer Price Index for August. Again, we talked about a questionable inflation picture in Europe. It's not much better in the US. Yep. We're expecting no change. Plus 0.0% is the expectation. The prior read wasn't a great deal better, just plus 0.1%. And again, the Fed has obviously fixed its own eyes on inflation. They've got a 2% target, like the ECB, like the Bank of England. But again, as we'll see a bit later on, we're some way away from that. Of course, the FOMC meeting begins today. We won't hear too much, though, obviously, ahead of the announcement tomorrow evening our time.
Okay, let's move on to US market pre-movers and some chart points.
Okay, well, first in amongst the pre-movers, the US pharma company Novavax Inc., that's ticker NVAX, $10.49, up around 3.15% pre-market. They've had some positive results from a pre-clinical study on animals into one of their infant vaccination treatments. So it's
encouraging.
It is exactly the right word. And then Anheuser-Busch InBev, that's ticker BUD, nice and easy to remember, in the US, $115.99. They're up by about 7.36% pre-market. And the reason is that the Euro-US brewer is to bid for rivals SAB Miller, who themselves are up 22% pre-market. SAB have said that just before we come in, they hadn't actually received any formal proposal from Anheuser, so we're obviously waiting for documents to be prepared. But it's an interesting move. Obviously, will be subject to...
It's been in the public domain for days, weeks, months, almost years.
It's also going to be subject to a lot of competition scrutiny because these are two very big groups with significant market shares across, on a global basis. So it'd be good from an economies of scale point of view. Competition authorities might have a different view. And then in terms of levels to watch today, a little bit better for choice in European markets. So FTSE now, we're looking at 6160 on the downside, plays 6230 on the upside. So we've moved away for now, at least, from that 6,000 level. For the DAX, a similar story. We were concerned about 10,000 yesterday, but we bounced away from there. So we can now look at 10,240 on the downside, plays 10,340 on the upside. We've raised our level slightly in the US as well to take account of yesterday's gains. So 1948 now, the downside level to watch in the S&P, plays 1980, whilst the Dow moves up to 16,500 on the downside, plays 16,640 to the upside.
Excellent. Currencies,
euro gives a little bit of ground back against the dollar, so 112.10 now. The downside level to watch, plays 112.58 to the upside. The range tightens in Aussie US dollar, but it remains, looks to remain for the moment, certainly well above the 70 level. So 71.35 now, the downside level in the Aussie dollar, plays 71.81 to the upside. Dollar yen has all gone very quiet there. 120.08 is our downside level to watch at the moment, plays 120.63 to the upside. Focus seems to be elsewhere for the moment. And in cable, we did press on briefly on the employment and wage data. 153.70 is our downside level, 154.30 to the upside. As ever with cable at the moment, it's a question of whether we can hang on to the gains we've made rather than just see them drift away.
Understood. Okay, so let's wrap up with one more slide, what I call the thought-provoking charts.
Okay,
In focus is the official title, I guess.
It is, yeah. And what we're watching, and US inflation is the thing. Is it still depressed? We'll find out when we see this. Well, we'll get some clue when we get the CPI data in about 20 minutes' time. But I just wanted to flag really that both inflation expectations is based on a market measure, and this is a chart that shows the one-year break-even expectations for inflation as derived from the price of US bonds, and how that's sold. Well, you can see the trend here has been down pretty much since 2012. We saw a brief rally in expectations at the beginning of the year, but it's caved in sharply and gone back below zero. Remember, 2% is the Fed's target price for inflation, if you will. This is the gain line, and at the moment the Treasury market is suggesting that there's some way to go before we're even back into positive territory. Yep. If we look to price-based measures, here we've got the rate of inflation in the bold black line, and the US CPI Consumer Price Index in the dotted grey line. You can see that whilst the CPI is trending higher in the red ellipse, the actual inflation rate's been trending lower. The thick black line here is the forecast, so it looks to me as if the inflation rate is actually likely to break below the forecast line, and that would sort of be borne out by the chart here on the left. So it's a real mixed picture as far as US inflation is concerned, a bit like the UK really. House prices are going up, wages seem to be growing, but everything else, prices seem to be flattening, and it's up to the bank, I suppose, to the central bank to decide whether it is going to rely on traditional measures of inflation or whether it will look through that into selected data points and make up its mind from there.
Because I saw a piece in the newspaper yesterday, no-flation. I hadn't heard that term.
Well, that would certainly, sum things up, and it's probably the case for most of the developed world. That's where they are. The only probably possible exception is Brazil, but they've got high inflation, but for all the wrong reasons.
Absolutely. Okay, Darren Sinden, market commentator, Admiral Markets. Thank you very much as always for your time. That wraps up the Wall Street Crossover Show. We'll be back same time tomorrow, 1 p.m. Have a good day. Thank you.